You are listening to ChartingWealth.com for Monday, the 11th of April, 2016. We start, as we always do, with the total market IYY. And as I look at the chart, those of you watching on video, you can see. Those listening by audio, I'll tell you. We have a two-day chart that appears to be showing a huge topping out. Now, can the market continue to rise? Of course it can. We've seen it do that for the last few years, even though it didn't seem to make any sense at all. It kept going up, up, up as free money kept being pumped into the market by central banks across the world. That could still be happening, but it does. It hasn't crossed over going down yet. We're not making that call, but we are sounding a caution. We've had the market basically top out somewhere around the 21st or so of March, and it has slidden sideways since then. The last two-day candle that we drew was a down candle, although the total market was up 0.19% on Friday. We have been seeing our derivative oscillator lose lots of speed, and we've seen a turn down in the MACD heading toward the red signal line for a crossover going down. Hasn't happened yet, but just sounding a cautionary note. Now again, we let the charts lead us, not what we think, not what we want to happen, not what the market mavens and the talking heads and everybody on Bloomberg, MSNBC, CNBC, and Fox Business say, and anywhere else. What we pay attention to are the charts, not the media noise. But the charts do appear to be showing us that this market is long in the tooth, but we've thought that before. We're going to let the charts lead us. Now, let's look at what went on throughout the day. On Friday, our last trading day of the week, we saw the market up in the morning, down in the afternoon. Technically, the bottom line was the day was up 0.19%. Still on the short chart, we had a crossover going down on the 5th of April, and we are still in a down move. Derivative oscillator and the MACD are both down. So market's a bit schizophrenic. Short chart has crossed through the two-day trend line. We're below the two-day trend line price-wise now, and we're in a down trend on the short chart. And of course, on the big chart, we are still in that confirmed uptrend, but it looks like it's getting very long in the tooth. Now, let's go on to the SPY. What is that? That's a Standard & Poor's 500. It looks very similar to IYY. Derivative oscillators lost most all of its energy, and the MACD has turned down, not yet crossed over the signal line. We have a red down candle for our last two-day candle, just below the two-day trend line. If we look at the intraday action on the 4-hour chart, up movement in the morning, some down movement in the afternoon. Overall, like we said on Friday, charts up 0.27 for the S&P 500, just below the two-day trend line. Cautionary bells are sounding, so just be aware. Again, just because the short chart's negative, it doesn't mean the rest of the market is. We're just being cautionary, watching the charts, still in a confirmed up move. Could keep going up. Lastly, as far as our indexes go, we're going to look at the Qs. Now, it was down 0.07%, so barely down, but it was down on Friday. We have almost a doji as far as the type of candlestick that we have, means lots of indecision. It was preceded by an up green candle. Now the NASDAQ 100 is still in an up move on the total chart, the big chart. We do have the MACD coming down a little bit, heading toward the signal line. Nothing like we saw in the total market and the S&P 500. We also have a lot more room on the derivative oscillator. It has lost some energy, but nothing as extreme as the total market and the S&P 500. So again, be careful, pay attention. We're still above the two-day trend line, so it's not as negative on the NASDAQ 100. So just pay attention, continue to watch. Now, and let's look at the intraday so you can see that. Of course, it crossed over way back on the 5th of April and has continued to move down, but still above the 2-day trend line. So be forewarned. Now, lastly, we're going to go back out to our 2-day chart, and we're going to look at gold. What's gold? Well, gold is down 0.15% for the day. The 2-day candle is up. It's actually crossed through the down 2-day trend line. We have the derivative oscillators lost some of its energy, and the MACD is still negative on the big chart, although we have two 2-day candles with green open boxes up moves. And again, it would be hard to draw a good 2-day candle now anywhere near in time as far as price movement goes. The trend line would be difficult to draw to not have it already crossed and broken. So we'll continue to watch. Derivative oscillators lost energy, as I said, and the MACD still has not crossed over. So continue to pay attention to gold as far as perhaps a stalling of those down moves. When we look at the short chart on gold, we see that the 4-hour chart crossed over in the afternoon, the 5th of April, and actually crossed through the 2-day trend line back on the 7th of April in the morning, and we've continued to see up movement since then. So pay attention to gold. Has gold reached a bottom yet? We don't know. Not until we see that 2-day trend line crossed and going up would we make any call at all. I'm sorry, not the trend line, but the MACD. Hope that you have had a good weekend. You are excited about a new trading week being upon us. We'll continue to monitor these charts all throughout the week. Let's see how exciting the week gets. So again, pay attention to these charts, not the noise. We love to hear from you at chartingwealth.com. You have questions, concerns, problems, need training that you're not getting, let us hear from you. We'll try to record it and provide it to you. Sign up for our newsletter, which will email you a link to our videos every day, plus our weekly review and forecast that I'm just about to record. Thank you so much. We love to hear from you. Follow us Facebook, Twitter, Instagram, YouTube, and of course at chartingwealth.com.